We're back at 9:16 on North Dakota Today, and when it comes to dealing with money, saving for retirement, or maybe even financing the family farm, try saying that 3 times, there are traditional ways of doing that, and then there are less traditional ways of doing it.
Mary Jo Irman is a financial consultant, and she is also the author of the book Farming Without the Bank, and she's here this morning to talk more about this. So good morning, Mary Jo. Thanks so much for being here.
Thanks for having me.
Now, of course, the bank is pretty much, I mean, when we think about how are we going to finance something big, that's the first thing that comes to mind, right?
Right, because it's all we know.
Right, right.
It's where we automatically go, is to the bank.
You're saying there's a different way.
Yes, there is an alternative way. Instead of going directly to the bank, let's create a pool of money for your own finances so that you can go to that pool of money and you can borrow against that and buy whatever it is you were going to buy anyway.
But how do you do that?
Well, what I'm doing is teaching people how to create that pool of money inside of a dividend-paying whole life insurance policy. So when they need the money, it's there for them to borrow against, and then they can pay it back. And they have the flexibility to pay that back when they can and at any speed that they want. They don't have, the bank is going to set guidelines. You have 6 years to make that car payment, and it's going to be this interest rate. And when you're borrowing that money from yourself, essentially, and borrowing it against your life insurance policy, then you get to decide when you're going to pay it back and how long it's going to take you to pay it back.
Now, when we talked about this, arranging for you to come on the show, I had never heard about this sort of approach to it, and I'm sure a lot of our viewers this morning, they're kind of scratching their heads going, we've never heard of this as well. So why haven't we heard about this approach?
It really is, it's been around forever. Whole life insurance has been around over 100 years. The companies that I work with have been around 115 years. And so it's been used forever.
So this is nothing new to the government or the IRS or anything like that?
No, it's absolutely not new at all. So what happened is in the 80s we had an influx of market, right? So the market went up, so everybody said, well, I'm not putting money in whole life anymore. But if you look back at history, what got our country through the 30s and the Great Depression? Whole life. J.C. Penney is one of the great examples that we use. He used cash value to continue to keep J.C. Penney open through the 30s.
I didn't learn this in my history class. But
no, you're not going to learn this in your finance class either.
Okay.
Hey, can I play devil's advocate here for a minute? Okay, so you have to pay the bank back or else they'll come and take your stuff,
Repossess
right?
it, yes.
Right.
Yeah.
So, but isn't it kind of human nature to sort of put off paying yourself back?
It is, yeah, but then you're not a good client. You really. I mean, I'm going to be honest. This isn't for everybody. And so if you're not, and we call it being an honest banker. So if you're not going to be an honest banker and you're not going to take that to heart, that I have to pay myself back, then this probably isn't a good option for you, and you might want to continue to use the banking system.
Anything else, you've got to exercise some discipline.
Right.
Some financial discipline.
Yep.
All right, so if someone's kind of curious about this, what's the first step they take? I mean, how do they learn more about this?
They can go to my website. So if it's a farmer or a rancher, they can go to farmingwithoutthebank.com, and they can find that I have a video on there. They can purchase the book. And if you're not a farmer or a rancher, I have another website that is going to be more apt towards, it's going to have a car example versus a grain bin example.
And
so
that's Fiscal Bridge.
Fiscalbridge.com.
Okay, but now how long does it take before you have a pool of money that you can borrow against for something major?
Well, that's kind of there's a short and a long answer to that. Okay. It depends how much you put in right away. Our farmers are going to have a significant amount in 30 days. But everybody is borrowing. If we're paying debt off with that policy, or we're borrowing things, borrowing money to pay things off like credit cards, those sort of things, we're borrowing money in 30 days, 7 to 30 days, so that we can get a head start on that process.
All right, we're going to take a quick break here. When we come back, more chat about financing your retirement or anything else for that matter without having to deal with a bank. Mary Jo Irman back in a minute on North Dakota Today.
We're back at 9:22. We are talking with Mary Jo Irman, author of Farming Without the Bank, and we're finding out how you can go about doing that.
And when she's talking about this, she knows exactly what she's talking about because she grew up on a farm in western North Dakota. You saw the financial challenges firsthand.
Yep, I did. My dad we had purebred cattle, and he farmed a little bit. And so he's been out of the purebred cattle business for years, but my dad and my brother still farm together. But I see not only the struggles that they've gone through, but the struggles that every farmer goes through. You know, there's ups and there's downs, and there's no guarantees. I mean, the last 10 years have been great for farmers.
Yeah.
And this year, it's not so good. I rarely have talked to a farmer out of probably 200 farmers I visited with since March. I have not talked to one of them that is not worried about where is money going to come from to operate next year.
And so what you're saying is if you have your own pool of money, then it's not quite so scary.
Right, because the banks aren't going to lend money if you can't pay back last year's money. So and you're worried about, as a farmer, you're worried about paying back. You borrowed $1 million, you have to pay back that $1 million that you borrowed, or they're not going to give you money for next year. And so when you have that flexibility that I don't have to sell grain or cattle right this second, and I can sell it in maybe 6 months from now and still get that loan paid back, you have some of that flexibility.
Okay.
When anyone goes to get some financial advice, typically they go to I was going to say mom or dad. That's probably not a good place to go, but a financial advisor. How many of these typical financial advisors are going to tell them about what you're promoting here?
Maybe a 1%.
Why? Why is that?
This just isn't something that is taught to them when they go to school. You know, they are very focused on the market, and they're very focused on a rate of return. And we're offering, inside of a life insurance policy, it's not an investment. It's a process of using that policy. So most life insurance agents don't even know. They're told, oh, go sell some death benefit. Well, the death benefit is fantastic and you need the death benefit.
Sure.
But what if we can give you the cash to use today? You're going to borrow against it today. You're going to buy your car, Monica. Then you're going to pay it back. And then when you pay it back, you're going to have it to use for retirement. Plus, your kids and your heirs are going to have the death benefit.
Okay.
So it's all encompassing, and it's the only tool out there, but it's just lost.
Okay, so how do you get started if you're interested in finding out more about this?
They can call me at the office, 701-751-3917, or they can go on the website and watch the videos and get a little taste of it, order the book. But best is just to come in and visit so we can sit down and look at your numbers and see if it's even going to work for you, because it doesn't work for everybody.
You're not claiming that this is a magic bullet, that this
No.
is a one-size-fits-all sort of approach.
No, it is not.
What would be the downside? Who would this not be applicable for?
For somebody that's got a massive amount of debt that they're already underwater.
Okay.
You know, those people, there's no money to put inside of a policy to even get started. For those people that don't want to pay it back,
Right.
And just it's not free money.
Sure.
It's your money and you need to pay it back. So
You
if
think you're going to pay it back.
right? Right. If you're not diligent, then this probably isn't the best option for you either.
All right. Well, one more time, let's put the information up in case people are interested in finding out more. Mary Jo, thank you so much for being here today and for sharing this with us. I had never heard of it, so good information.
Thank you for having me. I appreciate it.
All right.